Good afternoon, everyone. In today's video, we're going to focus on the Russell, get back to the futures volatility box in today's case. Now, the trade on the Russell, I think, is interesting for a handful of reasons. The first one is it was a very low risk trade, so we'll talk about that. The second is it was a very straightforward trade in which all of our rules were met, including the edge signals indicator triggering. And then the last one is you had the support of even the cumulative tick indicator. So in today's video, let's discuss this trade, break this down a little bit more. I think this is the closest that we've gotten to a picture-perfect trade, and I think it's useful to study this for at least future trade ideas. Now, starting off, looking at the Russell, the trade took place in the 9 to 10 a.m. Pacific hour, and we had price action slam into our short volatility box lines. Now, the way we see that is by price action breaching these cyan entry lines right here. Once we breach these entry lines, we're typically looking for an edge signal confirmation. Now, once we breached the cyan entry lines, we already had the confirmation of the cumulative tick indicator right here. This is the pro version, which has the Russell factored in. So based off of the Russell's ticks, we saw that we already had negative tick action. That's below zero. You'll notice at this point when we did have the breach, the ticks were something like negative 20,000 on the Russell, which should give you that first set of confidence that, hey, there is selling pressure in the Russell where shorting makes a whole lot of sense. Now, second, we had our edge signal confirmation right here. You can see that in the form of two red bearish arrow signals. And while we had the first signal, we still had plenty of opportunities to enter at our cyan line or better. Now, the cyan line represents our entry point in which our stop is outside of the volatility box clause, and we're risking the same amount on the opposite side looking to make our first target. Now, to give you an idea of what that looked like in terms of actual points on the Russell, if I switch over to our trendline tool, that was a risk of something like 2.3 points without adding any extra buffer room. So again, a very manageable trade for I think almost all account sizes. Or you can take a tenth of that, I believe, for the micros. So now taking a look to see when we hit that first target, we hit the first target right here in this first puke down lower. Then you had a little bit of Russell just chopping around sideways, didn't come all the way back to the cyan entry line. So for those of you that moved your stop on the remainder contracts down to break even, you were still spared. And then we saw a really nice Russell follow through here. Didn't come all the way down to our second target. But for those of you that at least use the trailing stop idea, you had a really nice target off of what was really just an initial 2.3 point stop, right? So this 2.3 point risk ended up giving you a max total of 8.4 points on the Russell before you then ultimately continue to reverse and then trend higher into the close. So hopefully this is very quick, but I think a very picture perfect sort of setup on the Russell in which you hit our volatility box entry lines off of our most aggressive models, which are the scalper. You had the edge signal confirmation right here. You had decent follow through. You also had the confirmation of the ticks right down here related specifically to the Russell in which the ticks suggested selling pressure. All three of these combined led to a pretty nice day trade opportunity in the Russell or the micro Russell futures. Now, if you'd like to see this in the micro futures as well, you'll notice a very similar setup in the volatility box works on the micros as well. And if you were to use, say, the IWM options instead of using the full-size contract, then that trade set up right here in that 9 to 10 Pacific hour. Then in IWM, you had a follow-through of right around 0.56%. So in all three cases, you had three different almost asset class types, either the full-size futures contracts, the micro futures, or the IWM options to try and play these moves that we get with our volatility box for futures. All right, hope this very quick video helps. We'll see you in the next update. For those that are in the SPY trade, that SPY trade is still open. The option expires tomorrow. We didn't see the gap fill that we were looking for today, but I am still optimistic that we will see it into tomorrow. And if not, then that was a risk of 18 cents per options vertical spread. All right, take care, everyone. Good luck trading, and we'll see you in the next update.